You have seen many of those videos in which traders recommend that you trade stocks at a certain moment of the day, every day, to be a profitable trader. I was very curious about these videos and wanted to see if such a strategy could really be profitable, if it could be the breakthrough many beginner and non-professional traders have been looking for. I did an experiment with this strategy recently, and here is the result. First of all, let me tell you a little bit about the scope of the experiment. I took a speculative stock, a super growth stock, a FANG stock, a defensive stock, a small cap, an ETF, and a 3X ETF for the experiment. I went back to every trading day of the month of July 2024 and bought 100 shares of each stock or ETF right at 9:45 a.m. at the market price. I went long because most traders, especially new traders, go long. I sold all my positions on the last trading day of July right before the market closed. I chose 9:45 a.m. because in the beginning of the trading session, the volatility is very high, but by 9:45 a.m., the market becomes largely stable. Just to be clear, I did not use real money for this experiment. My trading platform was in the test mode. Let me now reveal the stocks I selected for each group. Speculative stock GameStop, super growth stock Nvidia, FANG stock Amazon, defensive stock Nasdaq, small cap stock Titan Machinery, ETF QQQ, and 3X ETF SOXL. I often trade an SPDR Select Sector Fund and wanted to see how it performs alongside these stocks if I followed the same strategy. I will reveal the name of the fund and its performance towards the end of this video. I talk about money, trading, and investing. If you have not done it already, please take a moment to subscribe to my channel. That helps me a lot. Thank you. July 2024 had 22 trading days. The Nasdaq 100 saw a record high of 20,675 points on July 10th. And on July 16th, the S&P 500 saw a record high of 5,667 points. Since then, the market has fallen tremendously, an impact of which we may observe on our result. But choosing this portion of the market can be good for us, since the market both rose and fell during that time. Let's begin with the speculative stock GameStop. We bought the stock between $22.86 and $28.40. In 22 days, we bought 2,200 shares of GameStop with an investment of $54,912. Our average price was $24.96 and sell price was $22.67. We had a loss of $2.29 per share, which is a loss of 9.17% on our investment. We bought 2,200 shares of Nvidia from the super growth stock category. That required an investment of $270,171. Our average price was $122.80. We sold our entire position at $117.02 per share. We lost $5.78 per share. That left us with a loss of 4.72% on our investment. Our next stock, Amazon, needed us to invest as much as $417,448 to accumulate 2,200 shares. Our average price was $189.75. Our sell price was $186.98. We lost $2.77 per share, which caused us a loss of 1.46%. We chose Nasdaq, ticker symbol NDAQ, as an ultimate defensive stock. We bought 2,200 shares of Nasdaq for a total of $139,928, which made our average cost $63.15 per share. Defensive stocks have been doing much better during the market sell-off we are now experiencing in the tech sector. We sold our Nasdaq positions at $67.68 per share. That brought us a moderate profit of $4.53 per share, which is a gain of 7.17% on our investment in as little as a month. Not bad at all. Our small cap stock, Titan Machinery, cost us $16.43 per share. The total investment for 2,200 shares was $36,144. We sold Titan at $17.83 at the close of the stock market on 31st July and made $1.40 per share. The trade was good for our portfolio. We made an 8.52% return on our investment. The most expensive equity on our list was QQQ. 2,200 shares of this ETF cost us $1,063,860. I don't know how many of you have that much money in your trading account. I certainly do not. However, our average cost was $483.57, while our sell price was $471.07. Frustrating, isn't it? We lost $12.50 per ETF on this trade, but that was only a loss of 2.59% on our investment. Our 3X ETF was SOXL, Direction Daily Semiconductor Bull. We invested $111,093 to buy 2,200 units of this ETF at an average price of $50.50. This was the riskiest equity on this list, and we sold our position at $44.39 on an average. We lost, as expected, $6.11 per ETF, which is a dent of 12.1% to our investment. Our highest gainer after a month of trading was Titan Machinery, which brought us a return of 8.52% on our investment. Our biggest loser was SOXL. It caused us a loss of over $13,000, which is a 12.1% loss on our investment. Now let's see how the ETF I often trade did compared to these stocks. I trade XLF, the Financial Select Sector SPDR Fund. I invested $98,003 to buy 2,200 units of this fund, only to lose $0.81 per unit at the end of July. My average price was $44.55, and the sell price was $43.74. It caused me a loss of 1.82% on my investment. Its position is below Amazon and above QQQ on our list. Learnings from this experiment. Buying stocks at the same time every day is a dangerous strategy. Do not follow this strategy. Those who say it is not dangerous are inexperienced traders. They are fraudsters. They will ruin your account. You need real expertise in trading to make money in the stock market. You need to know exactly when to enter the market and when to exit. If we did proper risk management in the positions above, we would have been stopped out of our positions in SOXL, GME, NVDA, and QQQ before they lost 2%. If you are a beginner trader, don't even risk 2% of your capital per trade. Risk only 0.5% or even less. Don't risk a lot of capital on a strategy that you have not tested personally.